Hello and welcome. This is BQ Prime. I'm Agam Vakil and you're watching the F&O Show, a show in which we take you through all that is happening in the futures and options space. For now, we are taking a look at the markets and we are seeing an advance, a little bit of short covering rally with the Nifty reclaiming the 19,000 level, and we are seeing strength in the Bank Nifty too. In fact, we are seeing a lot of covering from yesterday. Though remember that yesterday, a lot of the concentrated positions were with respect to yesterday's monthly expiry. And as we move into the next month, the next series, that is in terms of the weekly as well as the monthly options, where that is where we're starting to see a little more coming through as far as positional short covering is concerned. That said, in general, to take a look at all that is happening in terms of activity with respect to the options in the coming week, coming down to the Nifty too, what we are seeing is a little more traction back around the 19,500 and the 19,000 marks. In fact, maximum open is for the 2nd November options expiry is at around 19,500 call and the 19,000 put, and a lot more activity around the 19,100 call, which is seen in addition along with the 19,000 put as well. So a little more writing coming through. Coming down to the Bank Nifty too, even as we see an advance of around 1.5% on the index, and the short covering in this index is a little sharper. Max OI stands at around 43,000 call and the 42,500 put. And of course, a lot of activity around the 42,500 and 42,700 marks. And in general, of course, it's looking like a Friday, which most likely could end in the green after not only a volatile, but also a week beginning to the new series. That said, let's see how things go and things pan out. But let's get in an expert voice to tell us about how things can work out over the course of the next 1 week and the next 1 month. We have Jayesh Bhanushali. He's the lead research at IIFL Securities. Jayesh, good morning, and thank you so much for joining in. As we move into the new series, that's the November series, Jayesh, what's your view here and what's the way forward, and what is your assessment of the markets at the moment?
Yeah, hi Agam. Good morning to all the viewers. Basically, if you see, this has been a trend throughout the last 1 year. On 2 out of 3 occasions, we have seen that whenever there is a huge unwinding happening, either on a long or a short side on the expiry day, the next day is a contra. So yesterday we saw a deep cut in markets, and today we are seeing the first day of the new expiry, we are seeing a humongous amount of buying happening throughout the last 1 hour. So this has been the general trend throughout the last 1 year. But I believe that the current momentum in the markets may take Nifty up to 19,150 or 19,200 levels. That would be the ceiling for the markets if you see for this week's expiry. The first week of November expiry. And in terms of Bank Nifty also, we remain a bit positive. We expect the indices to test 43,500 levels, which is where the immediate resistance is. So for if you ask me for the entire November series, my view would be to sell the indices on rise, as I believe the indices would try to get back to the previous lows which were created yesterday, and these lows would mark the bottom for the market. So we expect indices to bottom, Nifty to bottom around 18,500 to 18,700 levels, considering the entire November series, and Bank Nifty to bottom around 41,000 to 41,500. But for a short-term immediate basis, since you mentioned correctly, we are observing short covering in the markets. This short covering could take the indices up to 19,150 levels. Because yesterday, if you see, the indices tested the 200-day exponential moving average after a long period of time. So whenever the indices test such big levels, there is a support that comes into the market, and which leads to a up move of around 1-2%, which is what exactly is happening now. But I believe for the next couple of days, another 150 points up move could be possible. But if you ask me for an entire month, I believe we could see selling pressure at higher level, and we will be back to 18,600 odd levels during the coming days.
Right. So based on these observations, Jayesh, how would you play the Nifty, at least say over the span of the next few days?
Yeah. So for a span of next few days, I would like to create a ratio positions in Nifty, which is iron ratio spread. What we do is we'll be buying one lot of out of the money call option, which is around 19,100 level, and we will sell two lots of 19,300 calls. And on the downside, we will buy 18,800 puts, and we will sell two lots of 18,600 puts. So basically, what we are doing is we are covered both ways. If Nifty stays above 18,400 and 19,500, in between 18,400 and 19,500, we are tend to make money in this spread.
Okay, so that's largely playing for a relatively range-bound day, well, trade going into this week. Jayesh, as far as your bank Nifty is concerned, would you have a similar strategy, or would you play this differently?
Same strategy in Bank Nifty too. So we have been following this strategy since last 5 years. And if you see the volatility in the indices, the daily volatility of Bank Nifty has been around 1.5% if you consider high and low price. And because of that reason, we are observing that the delta part of this strategy would yield a positive payoff. So on the lower side, we expect 40,000 levels to hold throughout the November series. And on the higher side, we don't see the indices going above 45,500 or so. So basically, if we cap the wings in the this range, we are tend to make money.
All right. Fair enough. Well, in general, what Jayesh is playing at is that he is buying the strangle on either side, and then in that would of course be one lot, and then further out he's selling a strangle, but that would be in the ratio of two lots to the one that the strangle that he's bought, to perhaps simplify it in one way. But Jayesh, before I come back to you, let me to quickly address what's happening in the markets, and at the moment. As far as stocks are concerned as well, what we are seeing is and among the stocks that are seeing strength in today's day of trade is Coal India. That's up around 2.4%, and SBI, that's up around 2.4% as well. Reliance Industries will, of course, announce earnings later on today, and that's up around 7.8%. That's where a majority of the support is coming in for the indices. So naturally, a lot of these companies are, in fact, shedding some, well, I would say, strength to the indices in today's day of trade. Reliance, of course, being right at the top. Do remember that Reliance and HDFC Bank were the two counters which were, in fact, leading the indices down yesterday. And we have some relent in at least Reliance Industries in today's day of trade. On the losing end, we don't have too much in terms of the benchmarks. Dr. Reddy's is the biggest loser, but that's losing out less than 0.5%. So not too much to speak for as far as shorts are concerned. I reckon today, at least the Bears would hope that would be, a positive day to end a considerably volatile week. But Jayesh, coming back to you in terms of stocks, could you take us through a handful of names that you are playing? I believe you have something on Chola Fin. We have Trent as well as Sriram. You have buy calls for all of them. Can you take us through your views here then?
Yeah, definitely, Agam. So basically, we believe November series would be very good for NBFC stocks. And if you see the earnings of most of the companies, the monthly updates that these companies have given, they are likely to outperform during the next 1 or 2 months. So we have amongst our topic, we have Chola Investments. So currently it is trading around 1,176 odd rupees. We believe there is a huge potential that it could head towards the levels of 1,250 during the November expiry. So one can buy at the current market price, and the stop loss would be around 1,130-40 rupees, and the upside would be 70-80 rupees. The second stock is again from NBFC, Shriram Finance. If you see today's open positions, there has been a humongous amount of long positions being added in the stock, and we believe that 20,000, 2,250 rupees could be the upside for the stock. Hence, one can also buy Shriram Finance. The third stock is from retail, which is Trent. If you see the rollovers, 98% positions have been rollovered during this month, and which is a very significant in terms of if you see it historically how the rollovers have been. So from here on, we believe even in trend there is a potential upside of 4 to 5%, which can be seen. Hence, all these three stocks we believe could yield a strong payoff during the next week or so.
Okay. So those are some buy calls coming in from Jayesh. At the moment, we are seeing the markets hold on to the strength that we have seen since morning, and plenty of other stocks have also, in fact, reversed a substantial amount of their losses from what we've seen yesterday. On that note, Jayesh, we will thank you for joining us and taking us through your views as well as some strategies as far as benchmarks are concerned. We'll be signing out for now, but don't go anywhere. There's lots more lined up. Stay tuned to BQ Prime.